there's nothing more inflationary than an insolvent sovereign that is printing money to keep the nominal value of its sovereign debt high, to keep it nominally money good. And that's why inflation is where it is, despite all this inflationary, deflationary tech, excuse me. It's just they have to keep growing money units because otherwise, the debt implodes. And oh, by the way, the debt imploding is very hyperinflationary because the debt backs the currency. So if the backing of the currency goes to zero or is impaired, guess what happens?
One of the most provocative threads in Gromen's analysis is the connection drawn between the growth of stablecoins, the refinancing of U.S. Treasury debt, and the possible role for Bitcoin. According to his reasoning, U.S. policymakers and the Treasury may view stablecoins as a tool to finance deficits in a heavily repressed interest rate environment, a way to issue short-term debt or debt-like instruments at very low rates by leveraging the stablecoin ecosystem. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I think that's exactly what's going to happen. I think it's really encouraging to hear things like that, Square. I mean, it is quickly becoming a matter of utmost importance. I won't go all the way to life and death, but depending on events, it could become a matter of life and death for businesses to do exactly what you just described, which is just put a little, and individuals, put a little bit into Bitcoin. Because you can see what, the corollary to the Genius Act and the Stablecoin Gambit to support the Treasury market that we talked about earlier is, you're not going to support the stablecoin market, or the stablecoin market's not going to be big enough to support the Treasury market with Bitcoin at 200,000 or 500,000. He needs $1 million Bitcoin, $2 million Bitcoin to pull along the number of stable coins, to pull along the T-bill issuance. It basically, we wrote it as, the U.S., the Treasury seems to be standing up Bitcoin de facto as a competing reserve asset to gold. And then they can duke it out. Gold and Bitcoin can duke it out. We'll see. But that's exactly what has to, and that will rebalance things. That will take things away from the financialized guys. That will take power away from the Fed. That will do all the kind of things that you need to. It's to your point. It's a market. It will be a market-driven incentive system. That will be really. It will narrow wealth inequality. It will. But again, the only way it narrows wealth inequality is if people start buying some every week and self-custody it, because otherwise, if you don't self-custody it, they're just going to rug pull you like they rug pull, you custody it with, you just have to custody it yourself. You just, learn, it's so easy to do. There's very good services that'll help you do it. Just do it. Because otherwise you're just re-centralizing it elsewhere, and it opens up the risk for rug pull down the road. Gold wasn't so bad for America from 1860 to 1929. America had a pretty good friggin' run. You had this huge productivity, huge technology, right? Technology is not just electric stuff, right? You had trains, you had planes, you had cars, you had all this technology, you had washing machines, consumer goods, massive deflation, and it was highly productive and good for America, good for Americans. We were on a gold standard. And some of it a blended gold-silver standard, but that's the challenge. People say this tech is deflationary, and it is, but in the presence of a country with 7% fiscal deficits at the peak of the economic cycle, and 120% debt to GDP, and a hollowed-out factory base, I've said multiple times, there's nothing more inflationary than an insolvent sovereign that is printing money to keep the nominal value of its sovereign debt high, to keep it nominally money good. And that's why inflation is where it is, despite all this inflationary, deflationary tech, excuse me. It's just they have to keep growing money units because otherwise, the debt implodes. And oh, by the way, the debt imploding is very hyperinflationary because the debt backs the currency. So if the backing of the currency goes to zero or is impaired, guess what happens? That's when you really get a hyperinflation of some description, as people basically dump currency to just get me something that isn't backed by bonds. So yeah, Bitcoin actually does fix this. A gold standard would actually fix this. And you can make the case that Bitcoin is able to be, all the things in Bitcoin style, portable and verifiable and et cetera, et cetera, et cetera. You need a deflationary currency, or else, we're going to kind of continue down this path we're on. Whenever the government names something, you should sort of like assume it's the opposite of what it is, and you're usually closer to the truth. And so let's call the stablecoin gambit for what it is. They should have called it, we can't issue bonds at the long end of the curve in sufficient amounts at prices that don't blow up our debt anymore. So we are issuing and we're refinancing all of our debt in near cash markets. And that's what the stablecoin thing's about. But of course, that doesn't roll off the tongue quite as nicely as the Genius Act does it. So, but that's what they're doing. They are issuing, they are going to finance, right? And you can see hints of it, right? When you see Besant come, get sworn in and immediately double the pace of Treasury buybacks that Yellen was doing, which only started in, was it May of last year, April of last year? He doubles the pace of Treasury buybacks immediately relative to what she was doing. And it is heavily skewed. I won't say almost always, but it's heavily skewed towards issuing short-term paper to replace longer-term paper. So he's bringing in duration. And then I hear credible rumblings that, the plan will eventually be if you can get enough, if you can get stablecoins big enough, right? If this can work, then you will do some form of what the U.S. did in the 50s, which is make the T-bills that go into stablecoins non-marketable, and say, they're not 4%. All stablecoin T-bills yield 50 basis points, 30 basis points, whatever.
From the excerpt you shared, Gromen emphasizes that this is not just an abstract macro story. It has real implications for businesses and individuals. He argues, if you are a business or an individual, you cannot ignore this narrative. In his words, it is quickly becoming a matter of utmost importance. Depending on events, it could become a matter of life and death for businesses to do exactly what you just described, which is put a little into Bitcoin.
Powell will have taken control of the short end of the curve Besant will have taken control of the short end of the curve from Powell, completely disintermediated him. But we will be financing massive deficits and the cost of reshoring in near cash markets. Now, what would I want to own if Besant came out and said, we are going to reshore and I'm just going to straight print the money to pay it? What would we see? We'd see gold up, we'd see Bitcoin up, we'd see stocks up. And we might not see the long end of the curve go up, because if he's not issuing any bonds at the long end, there's a mindless bid for duration. I don't know if it's $400, $500, $600 billion a year from pensions and liability matching. Like, they have to buy no matter what. And as long as he keeps issuance out there below that number, long end can be relatively well behaved, as we've seen. Doesn't make me want to own it. They're getting killed on a real basis. But if we saw that, that's how we'd react. If he said that, that's what we'd react. Well, stable coins to finance large amounts of the deficit, it's just like the kissing cousin of printing cash to pay for the deficit. Why is it happening? Because it has to. That's where we are in this. Like, there's no mystery. You go through the history books, and these great powers that get into debt and have these big you start at the long end, and you foreigners, and then you stay at the long end, and you plug domestic, and then when you run out of that, eventually you end up basically printing money to finance your deficits. And we're not quite there yet, but that's what the stablecoin gambit is. Now, what else can they do? Look, if he can get the price of gold up a lot, at $20,000 an ounce, if they can do things that make the market bid gold to 20,000, and people used to think that was insane, but I got to tell you, at $100 a day, it's looking less insane. 50 to $100 a day moves on the upside. It's looking a lot less insane than it was, say, 6 months ago. But if he can get it to $20,000 an ounce, which, by the way, would only put it back to 1989, It would only put it slightly above the long-term average of gold's price relative to the foreign portion of our debt. The market value of U.S. official gold relative to foreign debt. $20,000 an ounce would deposit roughly $5 trillion into the Treasury general account, free and clear. It's just straight money creation using gold. It's an accounting entry. Wouldn't have to sell any gold, whatever. And then you could buy down a pretty big chunk of debt. You can go out into the market and say, I'm going to, either he can finance the U.S., the long end needs with that $5 trillion for 5 years at least, probably more like 8 years. Or he could just go in and immediately say, hey, I'm going to buy back $5 trillion worth of the $29 trillion out. That's going to take down 20% of the market. So debt to GDP is under 100 right away. Assuming a money multiplier, nominal GDP is probably going to run friggin' 15, 20% for a couple of years. Debt to GDP will be back to 50, 60% in a very short period of time over the backs of, the purchasing power of stablecoin holders around the world. So they could do that. But boy, they got to hurry because, Treasury, interest doesn't sleep. Announced about, 6-month reporting versus quarterly. Like a lot of people on Wall Street are like, oh, here comes more fraud. And I actually thought that was that's a really good idea. Like report every 6 months, the amount of effort, having been on the sell side for 15 years investment research, the amount of effort alone that is wasted on quarterly reporting is like mind-boggling. You have like the most brilliant minds in America, like reading the release, getting on the call, asking the comment, hey, good quarter, guys. And then rather than, hey, here's an idea for raising capital. Here's an idea for building a factory. It's insane. So I thought that's a good little baby down payment, but it's like, let's keep that going. If you sign something that is fraudulent or wrong, and so your first, I need to make sure I don't go to jail. Okay. Well, if you're thinking I got to make sure I don't go to jail, you're not thinking about how do I compete to Chinese? How do I go into this market? How do I do better in Brazil? How do I these are the real things you got to focus on, and we just haven't been for a long time. And it's all, like you said, it's all high time preference society, which is all around, at the end of the day, it's the currency. Why build a factory? Why plan out building a factory? And how do I allocate that capital when the dollar's moving around like this and the cost of that capital? You can't plan a factory. Come on. You've got to have some sort of a better currency system. All of the profits, all of the gains from productivity have accrued to the 1% and not to the bottom 50%. And I tagged him out. I'm like, with all due respect, Senator Sanders, in 1963, minimum wage in this country was 5 silver quarters. It was $1.25. Minimum wage $1.25. It's 5 silver quarters. The melt value at $51 of those 5 silver quarters today is like $8 each. So if minimum wage in real money terms was today what it was in 1963, minimum wage would be 5 times $8 would be $40. What is national minimum wage actually? 7.25. You want to know who stole the money, Senator Sanders? It's you and the politicians. You guys changed the currency system. You've been there for however many years he's been there. Change the currency system back. Nixon said it was temporary. That's where it all went. You go from having to pay people $40. Imagine if minimum wage was $40. What would wealth inequality be? Corporate profit margins would be a lot lower, sure. But corporate profit dollars would be way higher because we would be running an economy that would be essentially the version of what Henry Ford did initially, right? Which was pay his workers more than the market so that they could buy the Model Ts coming off the line. So that's the fix. That's the fix. If they ultimately, unless you fix the currency, you're not going to really be able to do a whole lot.
Additionally, regulatory risk exists. E.g., governments might restrict on-ramps into Bitcoin, could ban or heavily regulate. In one interview, he mentions a tail risk, where governments could temporarily shut down Bitcoin flows. Finally, markets can remain irrational longer than we expect. The narrative may shift, the adoption may be slower or faster than projected, and there's no guarantee valuations will move in a straight line. He emphasizes humility and the importance of positioning rather than prediction. Thanks for watching our video. Please like, comment, subscribe, and ring the bell. Everything helps us grow.